Hey guys, welcome to a brand new episode of the new series of What Moved the Markets, where we try and understand or make sense of developments that happened during the week. So, just as a continuation to what we discussed, I think in the last episode, I think after last week, the IMF came out with further projections of cuts in GDP forecast, and this time they just didn't talk about India, but they actually talked about everyone in the globe. So I'll just quickly put it up for you guys to see. So as you can see, the IMF, I mean, it just goes to show, I mean, where exactly are we projecting or predicting? Uh, in 2021, the output was projected to be around 6%, and then it moved to 3.2, and now the prediction for 2023 is 2.7. Now, the advanced economies basket as a whole is assumed to grow at about 1.1, which is hardly anything for the next year, whereas the emerging markets are at about 3.7%. That's the projection that they are making. But if you see the whole chart, right from advanced to emerging to overall numbers, I think the tiny speckle of hope which is there is with India in terms of the growth rate, where we are still maintaining that above 6% rate, despite the cuts, which was earlier projected to be about 9, and then it was revised downwards to about I think from 8.7 it was revised to 6.8, and I mean till now it's at about 6.1. So that's something which came as a development after we discussed, and sort of a continuation to what these cuts are coming in. I think the writing is still that despite all the headwinds, somehow India finds itself in a sweet spot, something that we discussed in detail in the last episode as well. What is interesting, gentlemen, is that the result season has started, and always it starts with the IT bellwether. So I'll hand it over to you guys if you have any thoughts on what's happening there and what can investors expect to see in this quarter.
Yeah, sure. Thanks, Saket. So, as we all know, that the IT results came out, and all the big four of the IT sector, TCS, Infosys, Wipro, and HCL Tech, came out with their numbers. Before going on to specifically about the result numbers, I just want to like to point out that the numbers have actually been a pleasant surprise for the markets. It was expected that the recessionary fear and etc. would eat into the profit margins and the overall deal book of these IT companies. But it would be not wrong to say that they've done a pretty fair job to weather this difficult situation. And it goes on to show that how important the sector is, or how instrumental the sector is to India's growth, right? So now let's dive into some numbers to make sense of the entire results. We'll be looking at 5 KPIs for the IT sector results, right? Starting off with revenue. All the four companies which I just mentioned, TCS, Infosys, Wipro, and HCL Tech, showed decent revenue growth, roughly around 4% odd. For context, this is the constant currency revenue growth. Now, just allow me a minute to explain what constant currency revenue growth means. So, what happens is these IT companies are exposed outside India as far as their services are concerned, right? They heavily export their services to UK, North America, and other different parts of the world. So, what constant currency revenue growth shows you is that if you keep a constant USD INR rate, what was the change or what was the effect on revenues and profitability? Because since USD INR moves every day, the impact on the profitability will also move up and down. So to keep that or negate that out of the picture, we use constant currency when it comes to gauging the revenue numbers for IT companies. So it was around the expected margin, expected timeline of about expected number of about 4.5%, right? Next, we move to margins. So the margins were also pretty strong for all the four companies. Something like Infosys showed about 150 bips of increase in their margins on a quarter-on-quarter basis. The underwhelming response was from Wipro's side, wherein the margin expansion was only 30 to 40 odd bips. However, it on the overall sector-wise scenario, it was still a good show. So now we move to revenue guidance. So besides TCS, all the other companies' management came out with their revenue guidance for the entire year. Wipro just came out with Q3 revenue guidance, and the overall scene was that they're sticking to the revenue guidance that they're given right at the outset of the financial year 2023. Right, again a positive for us, because generally management tends to cut the revenue guidance once they see that there are a lot of headwinds. Having said that, all the management have sort of maintained the initial margins posted by them. For that matter, HCL Tech has increased their revenue guidance by 100 odd bips. Now we move on to hiring. So attrition is one of the main things that have been the talking points in the IT sector over the last 4 to 5 quarters. And attrition is still pretty high. And hiring is on the underwhelming side. So if you take up TCS or Infosys or Wipro, so Wipro just hired about 605 folks in the last quarter, which is against almost 2,000 employees less as compared to their last year average. So the hiring is definitely on the underwhelming side, but management do say that the attrition has peaked out. So I think that is something that would be interesting for the markets to see in the times to come. And the last KPI is the deal win. So deal win or order pipeline is a very important part in the entire IT sector dynamics. And yet again, it has been a good showing. However, the street is divided on this, because while Infosys has shown a 60% quarter on quarter rise in their deal win size, TCS and Wipro has seen an underwhelming response on their deal wins. It's been flat, and for TCS it's been flat, and for Wipro it's down about 20 odd percent. So I think all in all, the results have been pretty good, and it has been actually it has shown that the IT sector is resilient to weather all the recessionary or the inflationary pressures that are there in India and outside, obviously. And just one another aspect to close this entire IT sector results is the point of how the mutual funds are tending on the IT sector, right? So a recent report from Motilal Oswal showed that the IT sector inflow has gone down from 13.5 to almost 9.8%. And that's like a decadal low. So again, the street is pretty divided on how the IT sector outlook is going to be in the times to come. Because on the one hand, IT sector is showing resilience when it comes to their quarterly numbers, but the market analysts or the portfolio managers in general are trying to be underweight on the sector until there is entire clarity when the sector is out of the woods. So I think that's my 2 cents on how the entire IT sector results were.
Okay. So Shyam, just for the understanding of our viewers, I think when you talk about the fact that it's important to look at constant currency growth, I still remember in my early days I used to always dabble between CC growth and the underlying growth. The understanding is that when you're comparing, let's say year on year, you take the same exchange rate as last year and index that with the earnings for this year, right? That's the right understanding to look at how you look at CC growth. Is that the way
Absolutely.
investors should look at, right?
Yeah,
That is
absolutely.
one. And I think the whole thing that you mentioned that, okay, while it's been a mixed bag, some companies have stick to their guidance. In some companies, there was contraction in margins. And at the same time, while Wipro's CEO has been quite vocal about the fact that people are moonlighting, I think the hiring number sort of relays that with what he's been talking about. So I think all in all, I would say it's a positive in terms of how the results are coming out. Yet, when we look at how the institutions are placing themselves, they are a little underweight, something which is at a weight which is like quite low for the last 2-3 odd years. Now, after I think the other interesting thing that happened this week was a lot of macro numbers came out, right, from US to India. But I think we'll try and restrict our discussion to what happened in India. So any thoughts there as to, how should investors look at it and what exactly, or how exactly do you make sense of these numbers?
Yeah, right, Saket. So yet again, another rant on inflation. People just talk about inflation left, right, and center. And inflation yet again surprised us negatively, though. So inflation for last month in September came at about 7.4%. For the uninitiated, RBI has a band of inflation that they target, right? The targeted inflation for Reserve Bank of India is anywhere between 2 to 6%. And this is the ninth straight month wherein the headline inflation has been above RBI's targeted band. So problems are there, definitely, right? And inflation is not just a problem for you and me or for a company per se. It's a problem for the entire economy or the entire economic stakeholders, because it affects each and every one of us in some way or the other, right? So let's look at, or let's dissect as to what was the culprit behind the high inflation. So the main culprit behind the high inflation was food inflation. So as we all know, the CPI basket, or the consumer price index basket, consists of different items, right? Different essential goods rather, like fuel, food, and other day-to-day items that one uses. And food inflation was the highest amongst all the peers in the CPI basket, and that is because prices of cereals and vegetables shot up due to unseasonal rains. So that is one of the major impacts as to why CPI rose to 7.4 ahead of analyst expectations. Now then we can look at other data points, like the wholesale price index also came in today, and wholesale price index came in at 10.7%, which was actually lower than what the market was expecting. Now here's a dichotomy, right? So our viewers would be thinking, if consumer price index is going up, why is WPI or wholesale price index going down? We have to understand that WPI and CPI do not work in tandem. There is obviously a correlation between them. CPI inflation is inflation on the retail side, whereas WPI inflation is inflation on the wholesale side. So there are a lot of factors that are involved when it comes to how the wholesalers have to maintain their margin before they can pass on any relief on prices to you and me as customers or end customers, right? So that is one of the major points on the WPI side, and something that I was discussing with Naveen as well, on how we import inflation as far as WPI is concerned. And I think Naveen has a very good explanation to that. Why don't you explain it to us, Naveen?
Sure, Sham. So, as Sham was telling us, there are basically different kinds of goods that WPI and CPI takes into consideration. While CPI affects an individual, that is the mango man, more, WPI is more from a perspective of producer side, wholesale price index. So there are three things. One, there are primary articles basket. Then there is fuel and power. Then there are manufactured products. So as you can understand, all of these work at an industry level and not at a individual user level, individual consumer level. All of these have slightly different ratings. Manufactured products has 64% weightage. Fuel and power has about 13%. Primary articles has about 22%. Now, what has been happening with this wholesale price index is fuel prices have been constantly increasing. For instance, in January 2022, fuel and power prices increased by 44% on a year-on-year basis. That is, when compared to July 2021, in July 2022, the numbers jumped up by 44%. Similarly, in August 2022, it was up 34%. And in September, it's up 32% again, right? So on a year-on-year basis, we are seeing a lot of jump, which is sort of contributing to the jump in the wholesale price index. But if you sort of check to see what the comparison is on a month-on-month basis, at least since July, the fuel and power prices have been sort of trending down. On a month-on-month basis, for fuel and power was down about 0.3%. It was significantly down about 5.4% in August, and then it is sort of flattish in September. So what I feel is, while on a year-on-year basis, we are sort of seeing this slightly inflated number. On a month-on-month basis, we are seeing sort of a trend towards this flattishness. Yeah, I'll stop at that. I don't want to make any predictions on how things are going to go. That is all on Putin.
Also, the fact that WPI inflation today is, let's say, lower than CPI, is that, would this be a correct view to take that, okay, this could be a sign that some of these supply side constraints, while India at some level was a little insulated to what's happening globally, but again, the whole to couple or not to couple, could that be, let's say, a reason why, or could this be an indication that some of these supply side issues that were sort of gripping us and was contributing to that, is that easing out? Could that be a logical deduction of this, or are we reading too much into it?
No, I think, yeah. Sorry,
Go
guys.
ahead,
Sorry,
Shyam.
go on. Yeah, go ahead, Naveen. No, not a problem.
So, at least as far as fuel and power is concerned, I think there is a clear trend. As far as other issues are concerned, logistics, I think if you sort of look away from the numbers here, if you tend to go by what industry participants are talking about and stuff, as far as logistics are concerned, if even deep diving into specifics of that stuff like chip shortage and all of these things, I think there's a little bit of easing out. But I think it would be reading a little too much into things to predict what kind of numbers are going to come up going forward. So we'll just stop at logistics. Yes, things seem to be getting better. Chip shortage, which sort of affects the entire auto industry, things seems to be getting better. Fuel and power, at least right now, is sort of like trending at a flattish level. Let's hope for the best.
Yeah, and I think just one more point that I would like to add, Saket, is that now the expectation of the market is that since WPI has softened, people are assuming that CPI will also soften in the months to come, right? But we have to understand that it is not like a like to like relationship. What happens is when WPI softens, it could be because of external factors, right? Because we import a lot of goods which comes under the WPI basket. So sometimes what happens is that we import a lot of inflation, or sometimes because the conditions are good or the supply side constraints have eased out, just as we discussed earlier, that could be one of the triggers why WPI has softened. So there is not a like to like relationship in the sense that if WPI has softened, CPI will necessarily soften. So I think that is one another point that I would like to mention here.
Great. I think that gives us a good view on how CPI moves and what are the basket items which are there in both these headline numbers. And I think one interesting deduction is both of them need not necessarily move in the same way. At the same time, both of them need not necessarily be correlated to each other. These are two numbers that gives us a good tracker on both the sides, and as the name suggests, it's kind of self-explanatory. One gives us a sense of what's happening on the wholesale side, and the other one gives us what's happening on the consumer side. Although there's also this big argument or debate that goes on that a lot of goods that we use on a day-to-day basis, or how this whole process is computed, I mean, there is academic or sort of a more practical argument to this, that some of those goods are not included in this basket, or this basket today is quite outdated. Any thoughts there, Naveen, or we just stick to what we have?
I guess I completely sympathize with that argument. And if I remember correctly, I don't know when. It was only a couple of years ago that this whole basket was recalibrated, and I think the base year was set up to 2012. I do acknowledge the arguments, but from an academic perspective, I don't want to voice any opinion about how we should be changing these things. So we'll leave it at that.
Great. I think the other interesting thing that has been happening now for quite some time is that we are seeing a lot of new digital initiatives come out. Last year it was about the whole boom around UPI, and then the account aggregator framework. This year, a lot of things have already been announced: the ONDC, the ULIP, and now we are also seeing stuff happening around in the insurance space. I know, Naveen, you track this space quite closely. So anything that you want to talk about? I think recently there were some new policy initiatives and announcements. So if you could, run us through what's happening on that space.
So there's one interesting development which I would quickly like to discuss. Well, we've all used Policy Bazaar, not to make it sound like an advertisement, but what the government is trying to do is they're trying to come up with their own Policy Bazaar kind of thing. They're going to call it Bima Sugam. It's like a one-stop digital platform where all kinds of health and insurance policies by all insurance companies will be listed. So what you can do is you can log in, you can buy insurance policies, you can raise your claims. Whatever claims you have, you can raise that over there. It also allows for two interesting things: one, agent portability; second, policy portability. So if you are not happy with the performance of your agent, you can obviously go here and raise a request, and you can choose the agent that you're comfortable with. Second thing, you're not happy with the policy, you're not happy with your insurer for whatever reason, you can once again place, just like how it happens with telephone numbers, you can sort of do the same thing and move away from your original insurance policy or insurer also. Of course, insurers, agents, intermediaries, everybody will also have access to this platform. So that's one interesting task. Another thing that they're trying to attempt to do with this is provide a demat kind of facility over here. So your insurance policy, when you buy one, what we now do is, like, we are very safe with the papers and stuff like that. We don't want to lose that. If it's, especially if it's a health insurance policy, you always have to carry a card and stuff like that. But right now, with if the claims are correct, they're going to give you access to a demat account where all your policy details are going to get credited to. You will not have to carry any paperwork. All the information can be retrieved from over there, and everything can sort of, like, be saved over there. So final point from an insurance company perspective is what is going to happen to your commission agents once people directly have access to these kinds of insurance aggregator portals. Well, one interesting point is insurance companies last year in FY 2021 period paid about 48,000 crore as commissions. So not to claim that these commissions are going to go away in the near term, but these aggregator kind of models, I think they make life easier for the insurance company as well as the end consumer, and sort of attempts to take away the middleman. So you don't also have to lean on the agent to sort of, like, explain things to you. The insurance company also does not have to pay the agent a lot of commission. So that's, I think, a saving from both ends.
Yeah, and I think, Naveen, something that we were discussing yesterday as well, in terms of insurance penetration, right? So India's insurance penetration stands at roughly 4 or 4.2 odd percent, which is against a world average of 7%. So one another factor here, Saket, that Naveen was also trying to touch upon, is that insurance as a sector is pretty underpenetrated in India. And what the government is trying to do by all these initiatives, including that of Bima Sugam, is to mobilize or democratize the use of insurance policies, be it life or non-life, across all stratas of the society. So one of the major catalysts in the insurance industry in India and across was COVID-19, right? Everyone flew to take a health insurance because they were like, they did not know when can a health emergency land upon them, and when can they have that emergency fund, when they have to use that emergency fund to help somebody at the hospital. So that has been one of the catalyst when it comes to insurance in India. But still, if you see, even post the entire COVID-19 wave, insurance penetration in India is pretty low or on the lower side as compared to world average. So I think we have a lot of leg room here to sort of grow, and all these policies like Bima Sugam, etc., would just enhance the user experience, both from a supplier point of view and from a buyer point of view.
Yeah, I think, if you pick up any sector in India and, you start comparing with global numbers, everything is underpenetrated. And I think it's a big function of how our GDP per capita is against what globally the number stands. But I think, contrary to what people think, where, let's say, okay, at some level, there's some mis-selling happening or there's some misinformation done because, the whole structure is loaded with commissions, with agents sort of trying to front load products where they make money. I think at some level, when you don't have an insurance policy in place, or when you don't have penetration happening, it's important to incentivize the distributors the right way so that the product reaches. Now today, no matter what we say or what or how we think about some of these companies, I think LIC has sort of ensured that every household in this country had access to some sort of financial savings. Now, whether that product is suitable or not, we are not going to get into that debate. But at some level, it has at least started, or let's say initiated the process of people parking money in some financial assets, thanks to tax incentives as well as the commission structure. But yes, today, thanks to more awareness and, these are all part of enhancing the experience, as you said. I think the other big change which we are also seeing right now happen is how things are being sachetized. So even in the insurance space, today, if you book a cab, you're offered a cab insurance. If you book a travel ticket, you're offered a travel insurance. I'm also seeing there is pet insurance coming in. There's apparel insurance. There's purse insurance, and I was just reading there's something called a cyber insurance now as well. So I think these sachetization is something which works wonders in India, and we'll see how this pans out. So yes, an interesting thing to see. And I think a lot of things that Naveen spoke about, which sort of makes the whole process of buying insurance easier, both on the supply side as well as on the demand side. Because even today, I still know a lot of people, gone through that whole COVID ordeal, yet, there's this innate ability in human mind that, we are immortal and nothing can happen to us. I think that attitude at some level still creates a big hindrance in the way we buy insurance. So let's see how this pans out. Any thoughts, Naveen, before we conclude today's episode?
I think there's a great personal finance lesson. Don't worry about what the markets are doing. Stay steady, like with your investments. Do it month on month or at whatever regular intervals. Markets are going to be high. Markets are going to be low. It's going to be all right in the long run.
Great. Thanks a lot, viewers, for tuning in. If you have any comments, any feedback, any questions for any three of us, feel free to write in the comment section, and we'll be happy to answer them for you. And looking forward to meeting you guys again next week with a brand new episode of What Moved the Markets.
Thanks, Saket. Thanks, Shyam.
Thanks.